You're watching ABC News 24. Hello, I'm Kim Landers. We're waiting for the outcome of the Reserve Bank's monthly board meeting on interest rates. And with me is Peter Ryan, the ABC's business editor. Peter Ryan, what's the decision?
The Reserve Bank has lowered the cash rate by 25 basis points to 4.25%, and that takes rates to their lowest point since April 2010. So today was a finely balanced decision, but I would say that the continuing uncertainty coming out of Europe and also private data yesterday showing that inflation was at the bottom of the 2 to 3% band has made the Reserve Bank more comfortable about interest rates, so they've cut by 25 basis points to 4.25%.
So while you get a chance to have a glance at the Reserve Bank's statement that it always issues with these decisions, just repeating the news that the official interest rate has been cut from 4.5% to 4.25%. This is the second month in a row that the Reserve Bank has decided to cut interest rates. As our business editor Peter Ryan mentioned, economists were evenly split on whether or not the Reserve was actually going to cut interest rates today. So we've seen two interest rate cuts over the past 2 months. Peter Ryan, what's the reasons that the Reserve Bank is giving for this decision?
Well, the Reserve Bank has said that they saw there was scope for a modest cut, and so 25 basis points is the way. But some of the reasons coming out from the statement is that they believe that the situation in Europe, the debt crisis in Europe, is starting to hurt Asia, which is very important to the Australian economy, and that also Chinese growth in China is slowing, and of course that's a very big concern given that the resources sector is dependent on that, and therefore the Australian economy is dependent on that.
Certainly over the last few months we've seen statements from the Reserve Bank, and they have been keeping a very watchful eye on this situation in the Eurozone with that debt crisis. And what we've also seen is a lot of reaction to that, because inflation had dipped slightly, had it not. This is the first interest rate decision since the Treasurer, Wayne Swan, had released his updated budget and downgraded some economic growth forecasts. But it would seem that the Reserve is also growing increasingly concerned about that situation in Europe.
That's right. The last few statements from the Reserve Bank have indicated that the growing storm clouds over Europe are a big concern, for central banks right around the world. No sign of any progress this week, although we have that meeting of Eurozone leaders in Brussels this Thursday. But inflation seen at being at around about 2.1%. That's very good news for the Reserve Bank and does make them much more comfortable. But really the biggest concern, not just for Australia but for the world at the moment, is that situation in Europe.
So now that the Reserve has decided to cut interest rates for the second month in a row, I'm wondering about the Aussie dollar and what sort of impact this decision is having on the Australian dollar today.
Well, as this was finely balanced, a 50-50 move. The Australian dollar was trading at 102.37 US cents before the decision hit, and right now 102.1, so not that much of a difference, but certainly given where that dollar's heading, there's no expectation that interest rates are going to be going up anytime soon.
And what about an expectation about whether or not there'll be interest rates cuts come the new year? Because the Reserve now has a little bit of a Christmas break. There's no January meeting.
That's right. The Reserve Bank has a break over January, although that doesn't mean that if things went really south in Europe that they would not be able to convene and hold an emergency meeting and possibly take emergency action. But at this point that would seem to be unlikely, but I think a lot of this hangs on the meeting of Eurozone leaders in Brussels. If there's no outcome from that and financial markets react badly, and also if Standard & Poor's feels the need to go through with its threat to downgrade 15 of the 17 Eurozone members, that may well take this crisis to a new level.
If you're just joining us, interest rates, the official interest rate has been cut from 4.5% to 4.25%. That's a decision from the Reserve Bank's monthly board meeting today. The Reserve mentioning that they're keeping an eye on the situation in Europe. Our business editor Peter Ryan is with me. And Peter, one of those situations in Europe, of course, is this warning today from the US ratings agency, Standard & Poor's, that they could possibly downgrade a whole heap of European countries.
Standard & Poor's is very concerned about the political situation in Europe, and that's slowing down any chance of a breakthrough that would either allow the European Central Bank to start buying bonds, or for Eurozone leaders Nicolas Sarkozy and Angela Merkel of France and Germany to get together to impose what they want, and that's fiscal control over Eurozone members. So, in other words, in return for bailouts or guarantees that fiscal controls over taxes, budgets and measures to fight corruption would be within the remit of the Eurozone, the same way that monetary policy is. And so when you see an outfit like Standard & Poor's say 15 out of 17 Eurozone members face a downgrade, and of those we're talking about 6 AAA countries, including France and Germany, that's a very significant threat, and they'll be reviewing the situation after the meeting in Brussels.
All right, and I suppose the other thing to watch for today is whether or not, of course, Australia's banks pass on this cut in official rates.
The banks have been making it pretty clear, and they've been softening up consumers and businesses that because of the threat of a credit crisis or the tighter situation in sourcing funds on global markets, that their own margins are under pressure. Ralph Norris, the outgoing...
Does that mean they're not going to pass that cut on?
There's a possibility. We'll have to wait and see which bank decides to be the first to move this afternoon. But there is a possibility that some banks, like the National Australia Bank last time round, might not pass on the rate cut in full. We'll see which bank is prepared to earn the anger of the Treasurer and Prime Minister by doing that, but we'll have to wait and see what happens.
Good luck to them. ABC Business Editor Peter Ryan, thank you.